I totally get it. You look at the world of crypto, and on one hand, it feels like this massive, can't miss opportunity. But on the other, with all the noise, the confusing jargon, and just the fear of making a huge mistake, it's completely overwhelming. Well, today, we're going to fix that. And you're not wrong to feel that way. I mean, you see the headlines, you hear the incredible stories, and that little voice in your head telling you you're missing out on a once-in-a-generation shift, that's a real feeling. The potential is absolutely undeniable. But let's be honest, that potential comes with a giant headache, right? It's just so confusing. It leaves you feeling paralyzed, worried you're just going to throw your money away on some ridiculous meme coin with no actual value. And that feeling, that paralysis, is what keeps you stuck on the sidelines. So that's what this explainer is all about. We're going to cut through all of that noise. I'm going to give you a ridiculously simple, foundational framework built on years of professional investing. My only goal here is for you to walk away with the confidence to finally take action. Okay, so first things first, let's talk about the why. Why is this opportunity so incredibly important right now? Well, it really starts with understanding what's happening to the money you already have sitting in the bank. Wow, okay, this slide tells a really powerful story. Just look at this. Over the last 5 years, the actual money in your bank account has lost almost a quarter of its buying power. That's just from inflation. But at the exact same time, an asset like Bitcoin has grown, well, exponentially. And here's why. While governments can print more and more dollars, there will only ever be 21 million Bitcoin. That's it. It has a fixed supply. So you see, this isn't just about getting rich quick. It's about protecting the value of what you've already worked so hard to earn. And this chart right here proves that we're not just talking about some random one-time price spike. This is the compound annual growth rate, which basically shows the consistent year-over-year performance. And while traditional things like stocks and real estate grow at a pretty respectable rate, Bitcoin's growth has been in a completely different universe. I mean, this is the mathematical engine that's driving this whole opportunity. Okay, so the opportunity is crystal clear. Now that we get the why, let's start talking about the tools you actually need to grab it. What are you actually investing in? I know there are thousands of cryptocurrencies out there, but don't worry, I'm going to break them all down into just 3 essential categories for you. First up, you have your store of value. The easiest way to think about this is to think of Bitcoin as digital gold. It's scarce, it's durable, and it's designed to hold its value, or even increase it, against a currency that's constantly being devalued. It is the absolute bedrock of the entire crypto world. Next, we have DeFi, which stands for decentralized finance. Now think of this as the technology layer. Projects like Ethereum and Solana are basically trying to rebuild our entire financial system. Things like banking, insurance, you name it, but on the blockchain, making it faster, cheaper, and way more efficient than the old systems. And finally, we have stablecoins. These are the critical bridge between the old financial world and the new one. They're pegged one-to-one to a currency like the US dollar. So you can move value around in the crypto world without having to deal with the wild price swings of Bitcoin or Ethereum. They're like the essential plumbing that makes the whole system work. All right, so with thousands of projects out there, how in the world do you start to judge them? How do you separate the real contenders from the hype? Well, there is one single number that is by far the most important for a beginner to understand. It cuts right through the noise and gives you a real sense of a project's scale and legitimacy. And that number is market capitalization, or just market cap. It's super simple. You just take the price of one coin and multiply it by how many coins are out there. That's it. A project with a multi-billion-dollar market cap is a huge established player. A project with a tiny market cap, much riskier, but it also has way more room to grow. This should be your first and best filter for everything. Okay, so now you know the what. You've got your toolkit. Let's talk about the how, because this is where the real key to success lies. It's about shifting your mindset away from being a gambler and starting to think like a professional investor. This chart it's just so important. It shows Google searches for the word Bitcoin compared to its price. Do you see the pattern? The absolute peaks in public excitement, when everyone and their grandma's talking about it, those moments align almost perfectly with the market tops, the absolute worst times to buy. The real money, the life-changing money, is made when it feels boring or even a little bit stupid to be investing. Now, the second part of thinking like a pro is having a long-term vision. And over the long term, there is nothing, and I mean nothing, more powerful than the magic of compound interest. Just look at the difference here. With simple returns, it's linear. You earn 50% on your original $100 every single time. But with compound returns, you earn returns on your returns. Your gains start making their own gains. The best analogy is a snowball rolling downhill. It starts small, but as it rolls, it picks up more and more snow, getting bigger and faster and bigger and faster. Over time, this creates exponential growth that just leaves simple returns in the dust. This is how real wealth is actually built. And here's a crucial piece of the puzzle. This market isn't completely random. Bitcoin, which leads the whole market, has historically followed a pretty predictable 4-year cycle. This whole cycle is driven by an event called the halving, which is literally baked into its code. It's when the new supply of Bitcoin gets cut in half, forever. This creates a massive supply shock. Less new Bitcoin can be created, and that has historically kicked off a new bull run. Understanding this rhythm helps you see when the better times to buy might be, and when the better times to sell might be too. All right, we have covered a lot. We've talked about the why, the what, and the how. Now, let's put it all together into a dead simple, actionable plan to get you started on the right foot. For a beginner, the best approach is a conservative one. It's just smart. This means putting the big chunk, let's say 75%, of your investment into your core holding. That's your most established, blue-chip asset, Bitcoin. The other 25% can go towards more speculative assets. These are your altcoins, which is just any crypto that isn't Bitcoin. They have higher risk for sure, but they also have potentially much higher rewards. This approach gives you a great balance of stability with some exciting growth potential. And that leaves us with this final thought to take with you. All the charts, all the data, all the numbers, they all just boil down to human emotion. Markets are a pendulum, swinging back and forth between extreme fear and irrational greed. A professional investor's job isn't to get swept up in that emotion. Their job is to step back, observe the crowd, and ask one simple question: which feeling is stronger today? And then do the opposite.